Assalamu Alaikum everyone, welcome back to the channel. In this video I will talk about the stock market. I will give you my thoughts on the stock market right now and what has been happening in the last few days, and I'm going to tell you what I've done, the fact that I'm not worried about what's happening right now and why you shouldn't be worried at all. So I'm sure you've heard in the last few days, if you watched the news, if you've basically gone on to watch CNBC or you went on YouTube or Yahoo Finance, you have probably seen something like this. You've seen the stock market is crashing, people are worried about their money, people are selling out, and as you can see, there has been a lot of sales. So this was about 2 days ago. And what has happened was, because the stock market, a lot of people were selling. As you can see, for example, companies like Amazon was down about 3%, Apple, Microsoft, Google's, the Disney's, the Teslas, the Home Depots and Procter & Gamble, Johnson & Johnson, you name it, almost every single company was a sell-off. Okay, and the reason for that is because people are panicking, people are worried, people are thinking about there's a one bad day and everyone thinks basically this is it, this is the end, this is where basically it crashes about 20-30%. Again, it could be, okay, but you don't really have to go down that route. If you've got great companies that you invested in, which we're going to talk about today, okay, then this shouldn't affect you. Okay, and I will show you right now. For the last, basically yesterday, the stock market was this. So yesterday meaning Friday. So last night when it closed, okay, this is the state of it. So Apple was almost at 1.2% up, but then it went down. You've got Microsoft 1.5 up. Tesla was just about 1% down. Now, so the stocks that were down 2-3% last, basically 2 days ago, yesterday were all 3%, 4% up. So this is a great example of what happens. One day, for example, if you look at the difference between this is a screenshot that I took on that day. Okay, you can see Johnson & Johnson, for example, it wasn't that bad on that day. I think it was about less than 1% down. And then yesterday, it was 2%, almost to 3% down. Okay, you can see Amazon was 2% down. And then today, basically yesterday, was better. So this is the kind of thing that you need basically to learn, what to do in this kind of situations. You need to know exactly what you're doing, and you need to think about your portfolio overall. So let's have a look at what has happened in just this week. So the last 5 days, the S&P 500, okay, was down. So at the beginning of the week until the end of the week, it was down about 2%. Okay, if you look at the last 6 months, okay, so in the last 6 months, it's up by 9%, almost 10%. Let's have a look at the Dow Jones. Okay, if you look at this, okay, the last 5 days is down about 1%. The Nasdaq, on the other hand, is down about 4% almost. Now, this is happening because people are selling their stocks. People are worried about certain things. People watch the news and they found out there's this and that happening. On top of that, some of these companies, basically, they are including the Nasdaq and so on, might had a bad, earnings report. But majority of these basically sales came from people panicking. And this is the kind of thing I want to talk about today. What should you do when you see something like this, when you realize the stock market is crashing or basically people are selling? What should you do? Okay, and that's the one thing I want to talk about today. So one of the things that I've learned over the last couple of years is, if you listen to Warren Buffett, he always talked about when the stock market is going down, what does he do? He always buys. Okay, if he sees great companies that are on sale, what does he do? He actually buys more of those shares, more of those stocks that he really likes. And that is a good way to look at it, because what you're trying to do is, in the stock market, buy companies that have a great business, great moat, and you want to hold on to these companies. And if you see a dip, that's your opportunity to even buy more. So yeah, absolutely, that's your opportunity to buy more of these companies. So for example, if you own, for example, Salesforce, and that's some of the companies that you own, and you see it down 6% on that day, what should you do? You should buy that company if you have the money. If obviously you're underweight and so on, and you want to add to that company, that's a perfect day to basically to add to. So what have I done? And one of the things that I've done is, basically, I use trading 212. So I'm going to share that with you for the first time. I haven't shared this with with you guys yet, so I'm going to share that with you today. I'm going to show you all my stocks, the accounts that I have, and so on. So what I did was, just last 2 days, when I realized the stock market was going down, I started basically another, so let me show you first of all. This is my current account. So let me go to the ISA account, which is about £22,000 at the moment. I think it's up about 6%. So I'll share that with you first, and we'll talk about that, and then I'll show you the rest of my stocks. Okay. So as you can see, it's about 6.13 up, basically, since the basic day I started. As you can see, there are companies like Tesla. Tesla is the only company that I have that doesn't pay dividend. Okay, all the other companies that I've shown you all of this, Tesla is the only company that I haven't shared with you yet, and I'm going to talk about it today, and I'm going to show you basically where, if you look at it right now, it's up about 80%, and I'll come back to that in a second. But the one thing I wanted to show you is this. I have an account that is basically tax haven, for example, okay, and this is what's called, in the UK we call it ISA account. So you get 20,000 maximum that you can actually put in. So I put in 20,000 already. I can't add any more money basically until the 6th of April. And because of that, obviously the stocks were going down. Some of the stocks that I own here were going down. So I realized I need to do something about it, and I need to buy some more shares. So within Trading 212, which is the brokers that I use, they have account called Invest, and this is basically I will get taxed. Basically my dividend will get taxed if I sell, or I will be obviously taxed as well if I'm making any profit. So what I did was I put £1,000 here, just basically that day, and I'll show you, in fact, if I can share that with you, if I can find the history. Here we go. So I'm going to show you. So basically, the shares that I bought for Taiwan Semiconductor. By the way, I do have another account with free trade, where I have about 4 shares, basically about 3.5 shares, I think, of Taiwan Semiconductor. So, and I bought one more share here, basically just on the 25th. Okay, so about 2 days ago, I bought 1 share, and this was way cheaper than actually what I previously paid for. So this was $126 for that single share that I bought. And if you look at also Clorox, I've actually started a new position. I haven't talked about this company yet. I only have 2 shares so far, and again, they were in a dip. If you look at the last month, okay, they basically were trading $226. Right now they're trading 180. So I thought this is a great company. They've been on my watch list for a very long time. I will talk about them a bit more maybe in another video. Home Depot, I own basically about 6 shares in my other account, the ISA account. PepsiCo, I bought 1 share. So again, if you don't believe me, I'll show you exactly when I bought it. So again, on the 24th, I bought 1 share for 132. I think that was the day they reported. Home Depot reported their earnings, and because of that, they were actually slightly down. So 256. Okay, that's basically how much I paid for that single share. I also bought Qualcomm, 1 share. Okay, on the 24th. So all of it is basically within this week. And the reason I did that is because I really like these companies, and they were on discount. So instead of panicking and selling all my shares, I decided to buy 1 share of each one of these companies. Okay, in fact, I bought 2 for Clorox, and the other I bought 1 share each. If they keep going down in the next few weeks, okay, I will be buying a bit more, 1 share here, 2 shares here, and that's what's called dollar averaging, and that's one of the best strategies that you can do. So the reason I'm showing you this now is I want you to stop and ignore the noise. Focus on the long term, and especially if you invest on companies, the business that actually are doing great. The business, the fundamentals haven't changed. So Home Depot is still Home Depot. Nothing bad has happened to the company. PepsiCo is still the same company. Even though they're down this week, basically that means nothing. Okay, people think, okay, for whatever reason they want to sell it, but that doesn't mean something happened to the company and the company has changed at all overnight. If you've done your research and you believe in what these companies are doing, and you really understand the business model, you've done your analysis, these are companies that you want to own for a very long time. When you see them on discount, that's the time to buy them. It's not the time to sell them. And that is basically the reason I want to share this video with you. The other thing I want to talk about as well is if you have a company, for example, that trades very high multiples, Okay, for example, Tesla. Let's go back to the other account. Now, I will talk about Tesla when I talk about the growth portfolio. I have got a very small growth portfolio on Tesla. Unfortunately, I bought Tesla a long time ago in trading 2-on-2, and I kept it in here. And I still want to keep these shares. I might take some profit out very soon, but at the moment, you know, I've been taking out some profit, and really. But let me very quickly show you. Tesla is a very volatile company. Okay, if you really don't have the stomach for it, don't buy Tesla. If you like the company and you believe in the company, then go for it. But let me quickly share with you. I started buying Tesla around April. Okay, at the time it was about, I think it was about $700 per share, $706 per share. And since then, I've been buying Tesla. Okay, I've been adding to it. So if I go back again here, so you can see since April, July, again, I have sold there about I think it was about one share. I took some profit out, then bought 5 Tesla shares for about £1,600, and then sold 2 recently for profit. And then I keep doing the same thing. So I'll keep buying when they're low and then sell it when it's actually higher. And I'm definitely going to do something like that very soon. So the reason I'm doing that is obviously to make sure that I don't leave any of your profit on the table just in case it completely crashes, because it's a very volatile company. Will I do the same to other companies in here? Possibly, but I don't think I would actually be doing that to Johnson & Johnson or Kimberly-Clark or any other companies, because these are very stable companies. They're not volatile companies like Tesla. And Tesla, because it's a growth company, is not obviously giving me any income every single month. Okay, and for that reason, I don't actually I take out some profit whenever I can. And because it's trading high multiples, obviously, and is a very volatile company, is a very speculative company, is a great company, don't get me wrong, and I'll talk about that when I talk about my growth portfolio. But it's one of those companies that you really, if you invest in Tesla, obviously, and generally, if you're investing in the stock market, obviously, if anything happens right now and I lose all £22,000 that I've got in there, I'm fine with it. Obviously, I will be disappointed, but I'm definitely fine with it because I know the risk that's involved. But I don't think that will happen because of the companies that I've actually invested in. And if you remember when I talked about how volatile my basically overall portfolio is less than 1%, which means it's very unlikely that I will lose my entire, entire money. But companies like Tesla, if you own high profile, very recent companies that are very speculative, then whenever you get a chance, then take out a little bit of profit and make sure that you know the risks that are involved. Okay, so when something like this happens and the stock market crashes and you basically goes down by 8% or whatever, right? So a couple of days ago it was down by 8%. Was I worried? Absolutely not, because I'm already in the green for basically a lot, and I know it will go back to that space because I do actually believe in this company, and I think it's going to be around for a very long time, and probably will go back to about 800 plus in the next few weeks if things basically go back to normal. Okay, so just think about what you're doing. Just the moral of this story is that you decided to own these companies. You've done your research. You want to hold on to these companies for a very long time. Okay, so don't basically listen to the news. Don't basically read about CNBC and what they say and the fact that stock market's crashing, this is happening, that's happening. Don't worry too much about basically what people are saying. Focus on your journey. Focus on what you're doing at the moment. As you can see, I have been buying, shares in this basic account since April. There are companies that I've actually never ever sold. PepsiCo, I've been buying for a long time, and as you've seen already in the account, I've already also bought a couple of more shares, but there's one more share in here because I do like this company. I want to hold on to it. Same goes for Qualcomm, Taiwan Semiconductor, and as well as Home Depot and so on. So please just don't worry. Don't listen to people. Just relax. Do what you need to do. Just keep adding. Whenever you see a sale on a company that you really like, just buy a little bit more. Okay, just buy, bring down your average to your total average, because that's really important. Because if it goes down by a little bit more, you're bringing your average down. That means you're gaining more profit and so on. So inshallah, hopefully that was helpful. I hope to see you very soon. If you haven't subscribed to the channel, please do so. Share, like it. Let me know what you think. Let me know how your portfolio is doing. Are you down? Are you up? Just let me know. My overall portfolio, if I take Tesla out, I'll probably be down about 2%. That doesn't worry me, because you know what, let me actually finish with this. First of all, if you look at the S&P 500, right, and if you look at the 1 year chart, remember when the stock market went down. So from there, it basically went down about 30%. Okay, so about 33%. Now let's have a look at it from where it was, okay, on the 4th of March, and where it is now. Is up by 21%. So despite the fact that it went down by 30% or more, we are now up about 20+%. So from there to so let me hold on to that. I'll show you again. So from there to there is about 22% up within a year. That's from March to basically right now where we are. So again, please think about that sort of thing. Don't really worry about what's happening right now. Tesla will go down. Amazon was down 2% a couple of days ago. Right now it's about 1% up. Again, these things happen. Okay. Broadcom, another company that I own, that was down about, I think, 4% or something like that the other day. Okay, almost 5%, and then is back now to normal. It's almost 2% up. So these things will happen, but just focus on your long-term goal, and focus on what you've invested, on what you're doing, for the overall. And don't worry too much about the news and so on. I hope you enjoyed that video. Assalamu Alaikum. Take care. See you soon.